How long does a correction last? And how bad will it get before it's over? Let's talk about it on the weekend update.
Okay, friends, let's talk about the market. Here's what you need to know. First up, this is the market the same way we've always been looking at it. But what I've done here is I've switched out a line graph for the S&P for a candle graph. So the S&P is here in green and red candles. 50-day moving average is in orange, 200-day moving average is in purple. And what do you notice? Well, you notice that we've given up our 50-day, we've come down to our 200-day, and today is the official first day of our 200-day moving average test. Now, to my eyes, we've been talking about this for a little while. I think it's completely normal and natural to release on your 50-day and come down to your 200-day, and that the uptrend is still in place as long as we're above our 200-day. I switched to candles so you can see we kind of like poked a little bit below the 200-day, and this sort of highlights one of those things that I was talking about. The 50-day is great. When you're going up and everything's going according to plan, you'll typically hold on to your 50-day, and it tends to be pretty good support. It's when things aren't going according to plan that you'll release and come down to your 200-day, and typically what you find at the 200-day is that there's much stronger support there. So I'm not surprised that we poked down a little bit and then bounced a little bit higher. I think we're going to begin our 200-day moving average test. And one of the things that I'd be looking for in this test, I think we are going to go below it. We are going to go below it by maybe 2 to 3%, give or take. I think there'll be a lot of panic and a lot of fear at that point in time. And then I think at that point in time, the market will reverse and go higher. But that's my official forecast, at least for right now. And here's the reason why. Here's all the S&P 500 corrections of greater than 5% since the March 2009 low. There's been 30 of these things. And what I can tell you is if we look at our current correction, it's been going on for about 15 days and we're about 7% off our high as of right now. If you were to average all of these 30 corrections together, the average correction lasts for around 26 days. So that tells us we're only about halfway there in terms of time frame, but the average correction is only around 7.6% in drawdown. And we're almost, maybe like 80% of the way there, if not more than 90% of the way there. And so that might have you feeling good about things. However, I think, to my eyes, I think we're probably only halfway there. I think we need a little bit more time in this corrective phase. And so I think we're going to go the distance, 30 days or more in this correction. And I think there's probably another, we're bouncing off the 200-day as of right now, but I think we've probably got to go at least 3% below it. So there's probably another 4 to 5% drawdown to come. And I think when those two things happen, I think we'll be through this correction. What I can tell you is, I'm getting a lot of phone calls. Certainly there's a little bit of fear in the air now, which is welcome after all the froth that was there after the election. But what I can tell you is all of these corrections, at the time, it feels like the world is ending. And what we know from history, since we're all still here today, the world didn't end in any of these events. And I would expect that this correction and what's going on with Trump right now, with tariffs and the economy and the market, I don't think this is going to be the end of the world either. So I feel pretty confident in that call. And I think looking at history, I think we got a little bit more, we got to press into the flesh a little bit more, I would say. There's also some important dates here, and this is sort of informing me as to what I expect on both market drawdown and time frame. So let's just go through these important dates. First up, March 21st is the March Options Expiry. It's a Friday. And this is important because there's a tremendous amount of options build up around the quarterly expiries, and that can push the market around pretty significantly. So normally this would be the only thing that I would be looking at this time of the year. However, these other two dates I think are going to be pretty important as well. April 2nd is Reciprocal Tariff Day, and I talked about this in the last video. I think this is going to be the important one, right? This is economically impactful and uncertain, so I don't think the market is going to take this one lying down. So one of the reasons why I think it's going to take more time and there's going to be more pain is I don't see the market giving us an all clear before Reciprocal Tariff Day. And, my take as to what's going to happen between then and now, I think what Trump is doing is brinksmanship, where you take things to the brink of potentially disaster, and then you kind of negotiate and get a deal, done very quickly and avert disaster. And I think that's what's going to happen around April 2nd. And I don't think the market is going to take it very chill. So I think there's still going to be some room to go there. But remember, once this is done, then there's positives coming to us later on in the future. And then finally, this would be the absolute latest that I would be looking at, before things turn around, would be April 15th, which is tax day. And typically what that's going to do is that pulls liquidity out of the market. And so you wouldn't expect to see a lot of strength, and you wouldn't expect the market to trade really well, before tax day, simply because of what's happening, the dynamics of what's happening with money at that time. So we've got 3 important dates here, and they all kind of line up around the same period, the same point in time. And so that's what has me thinking, I think we've got a little bit more to go in terms of the market dropping. I think we've got quite a bit to go in terms of waiting out this correction. It's going to be volatile until then. So it's not just going to be like we're going to go straight down until April 15th. But I would be looking to the back half of April, where the market should start to firm up and trade a bit better. At that point in time, options expiry is behind us. The tariff situation will be figured out and hopefully figured out to the positive. And then this liquidity drain out of the market will be done. And we'll be looking forward to Q1 2025 earnings, which should give some support to the market. So there you go. I think we've only got a little bit more to go here in terms of downside. I know it feels like a lot, but we've already, I would say, at least more than 50% of the downside is probably behind us at this point, at least according to my projections. And I think the 200-day should defend us. And I think, once we get past reciprocal tariff day and some of these other things, I think that's when the market reverses and starts to strengthen up again. And that's why I think we're okay to ride out this correction. We're going to be watching it very closely. And if it turns into something bigger than what it is right now, we'll certainly take action. But for right now, I think standing firm is what you want to do. So there you go. That's the weekend review. I'll see you next week for the news review. Take care. Okay, friends, that was the video. Hope you liked it. If you found it informative, good, entertaining, I'd love if you could scroll down here beneath the video and give me a like there. It helps us out with the algorithm. And then if you want to be notified first of anything new that we upload to the channel, if you come over here, click subscribe, you'll be the first to know as soon as we upload anything. Appreciate it. See you soon.